inter-market analysis software, and we're going to be talking about how we do that, how we use that to determine, exactly at what board. We should say about Vantage Point. The first is that it is based on inter-market analysis. Inter-market analysis, as you know, is the influence that a number of markets have on a target market. In the case of what Vantage Point does, it identifies the 25 markets or so that have the most influence on a target market, and then tries to analyze the degree of that influence to produce a set of intermarket data that it used to develop some indicators that make short-term market forecasts. When we talk about the forecast, we're looking primarily with the indicators that produce a typical price, which is a average of the high, the low, and the close. Most software, as you probably are aware also, that uses only the one price per day, the close, typically for the analysis, but all of the data is essential because there are some days that have some rather wide swings, and we need to include all that data to determine what the influence is on the market that we're talking about. Now, we're going to use today in the examples that I talked about before, as I said, with the oil, we're going to take a look at the Vantage Point screen that you see here. I mentioned we have a lot of data here, a lot of time, too much time to look at. So first of all, the first thing we're going to do is we're going to try to cut this back down to just the last 6 months. Keeping in mind now, when you kind of in the back of your mind remember that overall longer term uptrend that now is looking like it could be swinging into a downtrending type of situation. But we're going to look at just just this chart just as it is right now, even without looking at any Vantage Point indicators, and talk about a couple of points on the chart that could be significant if we were talking about it from the standpoint of being a traditional technical analyst and trying to trade it that way. When we look at the chart, the first point that we need to point out, I suppose, or first couple of points that seem to me to be fairly obvious, is when you look at that price that in 87, 80, somewhere around the 87 area, these prices right here, looks a lot like a double top. And that goes back to some previous highs that we have had around there. When prices get up to previous highs, you're always going to get into some resistance. And when they do get there, then you can expect some kind of a swing down from there initially, at least some kind of a retracement or some kind of an effort to back up, back and fill and pause a little bit before breaking through out into a new price trend. A couple of other points that you might want to note about this is that when you look at this candle right here, this candle right here, it look to me like doji candles. I'm not a candlestick expert, but just to point out a doji candle. The market opens at a given price, trades up and down a little bit, and then comes back to close at approximately the same price. That indicates some uncertainty on the part of traders, and they don't quite know which way to go, and that often it shows up at a market top. More likely, more inclusive at the top than it would be at a bottoming type situation. Again, reemphasizing that there are other dojis that you'll see there, and you won't have a doji at every top. And you don't necessarily think of a doji as necessary even to be a top, but that presence of a doji sometimes is a good clue that there is potential move or change ahead in the market. A couple of other things that you are looking at when you look at here in just this general formation, we have kind of an up pattern, down pattern, up pattern, and a swing down pattern here. An M top is what I call it, a W bottom, M top. When you break through this price right here, if you're a traditional trader, break through that interim low there, that's a pretty good clue that you have a downtrend underway. We aren't going to wait that long when we look at it from a standpoint of what we're looking at with the indicators that we're going to talk about, but that is, kind of one of the ways to look at it. Again, emphasizing the point, we had a low here, and then we had a lower low here. So we have broken that succession of higher lows, and now we're into a situation, if we're looking at it from a traditional standpoint, where we are again moving up slightly, the shorter term uptrend, longer term potentially longer-term downtrend in play. And when we look at it from the standpoint of where we're at today, kind of right in the middle of this little area right here, and a swing either way could determine the future direction. Of course, a lot of the people that think that we're going into a more of a hyperinflationary type scenario or anything like that are thinking that obviously the price of oil has to be one of those things that will go up. And so we shall see whether that potentially could be the case. With our indicators that we have from Vantage Point, we're going to go to our Vantage Point screen. Take a little look at. The first one that we're going to add is a moving average type of a signal, a medium-term crossover type situation. You're probably familiar with moving averages and some of the techniques involved with moving averages. In this case, we have in the medium term, predicted medium term moving average is that blue line that you see there. That is a 4-day exponential moving average, and that is compared against the black line that you see there, which is the actual moving average, a 10-day actual moving average of a close, the actual closes. So those little swings back and forth, Vantage Point has determined that for the intermediate time period, those are the best combination of moving averages to use to indicate changes in trend or another move that could come up. One of the things also in Vantage Point that you will find, and I'm going to use this because at this particular time we're interested in a little bit more of the longer term staying power. We're not interested necessarily in always being able to stick with it, but we're going to just show you a little bit what happens when we use what is called the triple crossover. And the triple crossover moving average is a 3 exponential moving average combination where you have the red line being the shortest moving average, the light blue line a medium-term moving average, and the dark blue line a long-term moving average. When they're lined up as they are in this situation here, where you have the move to the top, red, light blue, dark blue, top to bottom indicates uptrend, and of course when that switches and when that reverses down, as it did in May, indicates downtrend. So that's an indicator that you can look at in terms of overall reinforcement or affirmation of what the moving average trend is trying to tell you. A couple of other indicators that we're going to add is there are a couple of others that are available in the Vantage Point software, and we're going to add 2 of those to this display, as well as switch back to the predicted medium-term moving average for our crossover, moving average crossover experience. The first that we have here, we have a situation here where we have the Neuro Index. That's the gray line that you see at the bottom, and that gray index, that is a comparison of 2 3-day moving average, a predicted moving average, and a simple moving or a actual moving average. And what it does, it tells the difference between those is typical price in 2 days will be higher. The reading for that Neuro Index will be 1. If that forecast for the 2 days of typical price will be lower, the reading will be 0. So when you have a reading, for example, here where you have